Hello traders, Gary Wagner here, just after 10 o'clock in Honolulu, 4 o'clock in New York. It is Monday, August the 15th, 2016. Equities markets have closed, and all three, meaning NASDAQ, Standard & Poor's 500, and the Dow Jones Industrial Average, all closing at new record lifetime highs. Dow Jones Industrial Average up about 60 points on the day to close at 18,636. Standard & Poor's up very, very slightly, but 5.5 points in terms of the net gain at 2186. And NASDAQ also closing up on the day, this being the NASDAQ E-mini 100, closing up 18 points at 4822. Of course, a lot of this has to do with the fact that oil continues to rise, and today, in fact, closed up over 3% on the day, $1.35 gain to close at 45.84. We'll certainly want to take a look at an oil chart on today's trending markets. So traders, absolutely no doubt a decent move in oil today as it moved up about 3% on the day, 45.82, up about $1.30 per barrel. We talked about oil a little bit on Friday, and really what concerned me in terms of the upside was the fact that when we take a look at this cascading set of channel lines with the obvious bias to the downside, because considering the fact that the market traded to a high of 52 after trading to a low of 26 and had been slowly meandering to lower pricing until it hit this bottom roughly at about $39 per barrel, which quite interestingly enough comes at a 50% retracement, and it is a retracement of this long move here. We saw this market really begin to pop up. Now, in terms of the market trading, as long as it remained within these channel lines, these cascading channel lines, my sense was that we were looking at sideways to lower pricing in crude oil. I had put a cap on it at roughly 42 to 44, this being 44 here, 42 being right here. And as we move to the upper end of this channel line on Friday, I said that what we really want to see, because we did absolutely have a break above that, is whether or not it would come back into alignment or we'd get that genuine breakout, because a genuine breakout above that point says something quite different than if it goes back into the channel lines. We certainly got that breakout today on a fundamental basis. There is more talk about possibly curtailing production by OPEC nations. We also had a report coming from the shale producers saying that production actually was down over the last month or so. And so when you have a supply that is diminishing and a demand that's staying stable, you should see prices go up. Now, on a technical basis, we are at, I believe, a fairly critical area. Take a look at it this way. $46, and I'm going to simply draw an arrow across that, and that really corresponds to the high. The high today, 45.93. You can see that right here. But when we take a look at this particular price point, you'll see this series of tops here. This, of course, came in really end of April, beginning of May. We then follow it through and we get these series of bottoms right here. So we've seen this particular price point act as resistance. We've also seen it act as support. And now we are right flush up against this area. So a break above this, to me, would be an important statement. I do believe, though, in all likelihood, and we'll have to see if I'm right or wrong tomorrow or the day after, but in all likelihood, I would expect a little bit of resistance to come into this area, and that's just based upon this technical data that we just spoke about. So traders, absolutely an extremely impressive upside move in U.S. equities. We've had this slow and consistent growth over the last couple of trading weeks as we've gone to new record, new lifetime highs Former lifetime high was really this area at 2171. We're looking at the S&P mini, and I am noticing a little bit of a difference. For example, when we look at what we had, this of course was back in 2015, where we had these series of tops, and the market then began to trade in a dramatically defined and narrow trading range. You can see that right here. Here we make a new high, but it comes in and literally trades within this area until we have this dramatic drop taking us to these new lows. And then even when the market recovered and came back, although it was a lower low, you had these series of tops here, and they corresponded to this top, and this top. Of course, we took them out, and all of that until this most recent occurrence when the market melts down to about 1980. This, of course, being Brexit. And if you recall, my statement really just prior to the vote in Brexit was that if by chance it would get passed, because I really didn't think that it would, but if it would get passed, we would see a 500-point drop in the Dow and an excellent buy opportunity. That, in fact, turned out to be exactly what occurred because this market came down. This is a daily chart, so you can see that the actual sell-off was rather quick right in here. Only 2 days of sell-offs before we had just a dynamic recovery. That recovery staged itself to really move to these new tops. And I'm first speaking about these former tops, this being at 2170. We also talked about this scouting party that came in just last week. We've absolutely formed what we talked about, which is that beachhead. And at this point, as you know, my belief is that on the next rally, and we're certainly seeing that now, we could expect to see this market track as high as 2200. Now, we're only at 2186, so we're not all that far from that particular price point, and I think that we are certainly looking at this number in play and as a high probability of occurrence. This has been Gary Wagner wishing you, as always, good trading. We'll talk to you tomorrow for another daily update and review. Bye-bye.